Hillary Clinton wants to increase the top tax rate of wealthy individuals to 53%. In this video, I'm going to go over the rough economics of what happens when you raise the tax rates on a $100,000 asset that you sell that has no basis, and you're in the 53% bracket. Since I live in Pennsylvania, I'm going to use Pennsylvania as an example of the tax rate that could be imposed upon a person on a sale of the $100,000 asset. First, there's a 2% real estate transfer tax right off the top on the transaction. And that goes partially to the local government and to the state government. That 2% goes right off the $100,000. So after the 2% tax, you have $98,000 left to be taxed. Pennsylvania now taxes the $98,000 at 3.3% or thereabouts, which is about $3,234. Now that leaves $94,766 to be taxed at the Hillary Clinton tax rate of 53%, which means $50,226 then goes to the federal government. This means the total transactional taxes paid on a $100,000 asset amounts to $55,459, which means you get to keep $44,541 after the end of the year when you file your income taxes. Now, suppose I donate the property to a qualified charity. I get a write-off of $100,000 off the top of my federal income tax. I save, therefore, $53,000 in federal taxes by gifting the property. Now, these figures may not be 100% correct. Some states will have a higher tax rate, some lower. In some cases, you don't have transfer taxes. In some cases, you do. But the general essence of what happens here is that you may be better off to gift the property. Not only when you gift the property do you end up with a higher amount of money that you keep in your pocket, but you can have some control over the asset once it's been gifted by setting up the terms of the gift. Now, a lot of wealthy people set up foundations, i.e. Hillary Clinton and the Clinton Foundation, Bill Gates, the Gates Foundation. All these rich people set up these foundations. Now, why? Because they want to do a lot of good to the public? No. They want to have their pie and eat it too. They want to be able to use their assets and see their assets used in a wise and a manner that they feel comfortable with. Now, you don't have to worry about your tax rate going to 50%, but a lot of us do. And especially people like me, as a farmer, we own a lot of land, and we're going to get hit with not only the higher tax rates on the income as we receive them, but these idiots like Hillary Clinton and Bernie Sanders, they're going to want to have a high inheritance tax rates, which will mean we will have to sell farms on my death or my wife's death in order to have the tax money to pay the government. On the contrary, of course, what that'll mean is, we'll go out, we'll buy life insurance policies and do all the heroics that the wealthy do to help protect their assets. But the end result is that when you raise taxes, you're likely to get less money in because people will then have more of an incentive to find a way to avoid the tax. So, you go ahead, raise the tax rates and see what happens. You think you're going to end up with more, but you will likely end up with less. That's why we really need to have a businessman in charge of the economy for a little bit to get it straightened out and let it get it working again. That's why someone like Hillary Clinton and Bernie Sanders are probably going to be the death throes of our economic engine of this country if they're elected to the highest office in this land. So think twice before you pull that Bernie Sanders lever or Hillary Clinton lever, because it could mean your job.
Give us a call at Highland Hill Farm for your trees and shrubs. 215-651-8329. We ship from Fountainville, PA, Milan, PA, Lenore, North Carolina, and McMinnville, Tennessee. Thank you.